afternoon, everybody, and this happens to be our second session on technical analysis. And what we are going to take up today primarily is the candlesticks chart. And within candlesticks chart, I'm going to take the candle types, the specific candle types. And if you understand this, it is going to be very easy for you to find out which way the market is likely to move. Remember, I use the term likely to move in the coming time. When I say likely to move, why? Because there may be so many situations, so many controllable, uncontrollable factors which might have an impact on the markets. Okay, so that's why the term likely, because anything can happen at any point of time. Remember, the external environment is very, very dynamic. So again, a word of caution that whenever you sort of take any kind of decision, entry, exit, buy, sell, hold, you have to be very, very careful as to the chart types, of course, but also what is the kind of information which is coming in the market at a given point in time. So let's start with the chart types, and I'll just give you a brief about technical analysis, right, as to what it is and why it is that important. Yes, so technical analysis has a huge quantum of information in terms of intraday traded price and opening and closing day prices. The data is represented mostly in charts. Now, charts plot the price information well, and several observations have been made from the formation of similar patterns over a period of time. And if you see this chart types, that is the technical analysis broadly, because technical analysis is broadly the analysis of the charts. So the chart patterns and hence the technical analysis can help determine who is dominating the market at a specified time, whether it is the buyers or whether it is the sellers. Now this information can help the investors or prospective investors to understand the market and achieve their investment goal. Now, talk about chart type analysis. It can be used or it can be applied for short-term or long-term forecasts. The data can be intraday, it can be daily prices, it can be weekly, or it can be on a monthly basis, and the patterns can be as short as 1 day, fraction of seconds maybe, or as long as many years. So, certain trading patterns could be identified through the plot of intraday prices itself, while many patterns take months of take months of trading data to form. Now, it is said, and you will of course, understand this very well, that it is said that a picture is worth 1,000 words when it comes to trading and investing, and thereby the importance of technical analysis and charts. Several investors want their charts to tell them the entire story. And as I discussed in my previous session, that the most commonly used chart patterns are line charts, that is most commonly known as line and volume charts. Next is bar charts, and the most important of all of these is the candlestick charts. So prior to candlestick chart, we should have a clear understanding about the candlestick chart types. Now, just a little bit of brief on why this term candlestick or from where it actually originated. So it originated in Japan, and candlestick charts is one of the most relevant and significant chart type as it reveals an extra intuitive interpretation. And why the term candlestick? Because the kind of pictures, the kind of projections which you see are mostly in the form of candle. That is how it gets its name, candlestick charts, candlesticks, right? So what you can see over here is various types of candlestick charts which I'm going to take you through. But what you can see right now is a white candlestick chart. Now I've also written green candlestick charts. I'll explain you why. So it depends upon the kind of software which you are using. Some software they depict or they throw the candlestick in the form of black and white, whereas some software they will be projecting the chart patterns, the candlestick chart patterns, either in red or in green. So let me tell you at the very outset that white or green, whatever may be the software, but essentially white or green candlestick, they refer to the bullish, and the red or the black, okay, they refer to the bearish. So that is something which is very, very important for you to understand and also to identify while you are looking at the chart time. Now, we refer to this white and so to say the green candlestick chart. Okay, we understand the candle as to what are the various parts which has to be looked to come to a particular conclusion as to what is the market sentiments, what is the investor sentiments. So as you can see over here, you can see that there is this green candlestick. Okay, it can be a white candlestick also, but essentially what it projects is the bullish candle or the bullish market sentiment. Now, what you see over here is a body. So this green, what you can see over here, it represents the real body. And what you see over here, so this is the real body. This is representing the opening prices. This is representing the opening price. And this part over here, as you can see by this arrow, is representing the closing price. So what you see over here is that the closing price is over and above the opening price, right? The closing price, okay, for the day are over and above the opening price for the day, all right? And since it is over that, on top of that, it indicates that the market sentiment for that particular day was very positive, was very bullish. Now, this is the highest price for that particular day which the market has reached. It can be for an index, it can be for a stock, it can be for a commodity, all right? And this over here at the bottom, this reflects the lowest price for that particular day related to that particular financial, right? And over here, if you look at this particular arrow, this essentially, this line which you can see, it is referred to as the upper shadow, or it is also commonly called as wick. And the one at the bottom which you see again, this extended line which you can see, okay, that is referred to as the lower shadow or the lower wick. And essentially, this refers to a bullish market sentiment, or this is called as a bullish candle. Okay. Remember, it can either be white, that is the real body color, can either be white or it can be green, depending upon the kind of software you're using. This, if you see on this side of your screen, on the right hand side of your screen, what you essentially see is the day's range. What does day's range reflect? What was the highest price and what is the lowest price? So let's say the highest price was 100 rupees, the lowest is say sort of 10 rupees. Then what is the day's range? You will say that the day's range is 90 rupees, right? And yes, so this is about the white candlestick or a green candlestick. Now essentially, whatever I said, the white candlestick or the green candlestick, as you can see over here on this side of the screen, on the right hand side of the screen, it implies the buying pressure and shows that prices advanced during the day from open to close, which is the open. This is your open. This is your close. This is your close. And the buys were in control. Okay? Just remember this. This is your opening price and this is your closing price. So it ensures that the buyers were in control of the market for that particular day. How do you recognize this? The body of the candlestick, as I already said, is white or green with normal length, right? Candlestick requirements and flexibility with reference to this is the white body of the candlestick should be of an average length, and the shadow's length is not important. What are shadows? These are the shadows. So the length of the shadows are not important in this particular case. Now, what kind of trading behavior does it reflect? So this candlestick alone, you have to be cautious on this. This candlestick alone is not reliable enough to decide about the bullishness, since it reflects only one day's trading pattern that was under buyer's control. So you will not be taking your decisions based only on a single day, so to say. Okay, because you have to see, as I said at the very outset, you have to refer to the various factors which are making news. It may show the continuation of a trend as well as the reversal. So it can be either ways, okay, and that is what you have to be very careful. So you have to see what was the preceding day's candle, whether that was also bullish or whether that was bearish, right? And so that is what you have to essentially sort of again identify. The other neighboring candlesticks must be taken into consideration for a decision regarding the market. This is very, very right. So you cannot judge only on a single day. Okay, all right. You have to see what has been the neighboring candlesticks. Okay, which should be undertaken to come to a particular conclusion as to what kind of strategies you want to formulate. Next, we come to the black or red candlestick. Black essentially reflects the bearish sentiment, or red reflects the bearish sentiment. So again, as you can see, I hope you will be in a position to identify why this is referred to as a bearish candle. So bearish is, just look at the open. What is the opening price? It's on the top. And look at the closing price. It's at the bottom. Now, do you see this closing price? Yes? So this is the closing price for that day. Right? This is a real body which is reflected in red. So this very thing of opening price and the closing price, that is the position of the opening price and the closing price, it reflects everything, right? And it shows that the market for that day was bearish in nature. The market for that day was bearish in nature. Why? Because the closing price was below the. So this is the highest price for the day, this is the lowest price for the day, but what we are primarily interested in is what was the opening price and what was the closing price. Of course, as I said before, this side, this line which you are seeing, it is referred to as the upper shadow or the upper wick, and this is referred to as the lower shadow, as the lower. And this represents, on the right hand side of the screen, as you can see, this represents days as to what was the highest trading price and what was the lowest trading price for that particular day. Now, so essentially, as you can see, all right, this candlestick, all right, black candle or red candle, whatever is kind of software which you are using. So it implies normal selling pressure and shows that prices declined during the day from open to close, and the sellers were in. So if it is black or red, it identifies, or you can identify that the sellers were in control of the market that particular day. The body of the candlestick is black or red with normal length, right? And the requirements and the flexibility for this kind of candlestick type is that it should be of average length, right? And the shadow's length, it really doesn't matter, right? What kind of traders behavior you get to know from this kind of a pattern? The candlestick alone is not reliable enough to decide about bearishness, since it reflects only one day's trading that was under seller's control. So it may show the continuation of a trend, or it may as well show as a reversal. What do you understand by the term reversal? So let's say if the market is going constantly higher high, okay, then maybe that from there on the the market might reverse, the market's trend or pattern might change, which means it can from there on start coming down. And that is what is referred to as reversal. Or it can be the other way around, which means that the market is moving on the lower low, so it's going down, down, and down. And after this particular black candlestick, there is or there may be a possibility that now it is indicating a kind of reversal, right? So be very careful before taking any kind of clues from this. You have to again go through the neighboring candlesticks, which should be considered for a decision regarding the market direction. So always understand that anything, any candlestick type, whatever decisions you take, should not be taken in isolation. That is the underlying word. Nothing should be taken in isolation, right? Because there are so many things which are happening across the markets, okay, and nothing can be sort of shut down because you never know what will have an impact and what will be the weightage. So this black or red candlestick, it is referring to a seller's dominant kind of market, and it also reflects the bearish sentiment. Now, this is something very unique and something very typical. In this case, if you see, the opening price and the closing price are at the same level. The opening price and the closing price are at the same level. So then, what does this reflect? This kind of a chart type or this kind of a candlestick reflects that it is neither the buyer's market nor the seller's market. And it is at this point in time that the market is said to be neutral. It can be said that the market is indecisive. I mean, the investors, they don't know which side the market is going to move from here on. So essentially, they are waiting for some kind of a news so that there is a kind of a change in the trading pattern. Next, if you see, we now come to long day candlestick. Now, what is a long day? What is represented by long day is the open and close price. They are considerably different. So a long day represents a large price movements from open to close, where the length of the candle body is long. So here you have to be very careful that the length of the candle body should be long, right? And here also we are having two different kind of candlestick which sort of portrays a different kind of market sentiments. One is the long white candlestick or the long green candlestick. Okay, so as you can see on the right side of your screen, you see the real body is very, very long. The real body of this candle is a little bit long. And this candlestick implies relatively strong buying pressure and shows that prices advanced during the day significantly from open to close, and the buyers were very, very aggressive. So let's say all of a sudden, if you get to know this kind of, there is a news making rounds in the market that a lot of money has been pumped in. Okay, there is a lot of FDIs and FIIs which are taking place. Okay, a lot of economic boost has been given by the finance minister. And then with this kind of a positivity making rounds in the market, you then get to see this kind of long white candlestick, which shows the buying pressure existing in the market. And usually in this case, the closing price will be much, much higher than the opening price, indicating that the buyers are very aggressive, buyers are very, very optimistic about the. How will you recognize this? The body of the candlestick is either white or green, okay, and it is long. So this is one good way of sort of identifying this kind of a chart type. Now, what are the requirements of this candlestick and its flexibility? So the candlestick should be longer relative to other candlesticks on the chart. Okay, so that is one good way of sort of understanding the long white candlestick. and the lengths of the shadows are not very important. So the major emphasis should be on the real bottom. So what kind of a trading behavior does it emphasize? It emphasizes a bullish sentiment across the market on that particular day of time period. And however, its position within the broad technical picture is it may show a potential. Why that is important? Because it may show a potential turning point and suggest that prices have reached a support level after an extended decline. Very important. And if it is seen after a long and significant rally, it may point to excessive bullishness and that prices are at dangerously high levels. So what will happen if the prices are dangerously at high levels? Maybe going ahead, okay, that prices you might see sort of a reversal. There may be some kind of okay going ahead, and maybe there might be a reversal which can be seen. Right? So still, the candlestick alone is not reliable enough to decide the direction of the markets since it reflects only one day's trading. But essentially what you can read from this particular candlestick, which is referred to as long white candlestick or long green candlestick, is it is the buyer's pressure and the buyers are very, very aggressive and the market sentiment is upbeat. It's very bullish. Next is the long black candlestick or long red candlestick. It is exactly opposite to the long white candlestick. And this relatively, as you can see over here, just look at the real body. The real body of this candle is on the, it's very long, right, as you can see. And yes, in this case, what is going to happen? Since it is red in color, which means that the opening price should be somewhere positioned over here, and the closing prices should be positioned somewhere, which means it is the seller's market. The sellers have been dominating the market, and there is a relatively strong selling pressure. So these kind of a prices, or this shows that the prices decline during the day significantly from open to close, and the sellers are very, very aggressive. So let's say a lot of negative news is coming in, like the quarterly reports across the top 50 stocks are not that positive, right? And this trend is likely going to continue, and given the kind of situations we are in, right? So this will essentially indicate that the market is a seller's market. And to further identify this, how will you get a feel of it? You will have to see whether there is any formation of the long black candles. So the body of the candlestick is usually long. This is one way of recognizing this particular criteria. And what is the kind of requirements and flexibility? It should be longer relative to other candlesticks on the chart. And also the wicks which you are seeing or the lengths of the shadows are not important. It doesn't signify anything as far as the long candlestick is concerned. The trading behavior is generally bearish in nature. However, its position within the broad technical picture is equally important. It may show a potential turning point, suggesting that the prices they have reached a resistance level after an extended rally. So you have to be very, very careful as to what is the kind of candlesticks which were existing prior to that day's candlestick, which is actually showing a long black candlestick or red candlestick. If it is seen after a long decline, it may signal panic or capitulation in the market. So a final sell-off attempt before the bulls regain. So maybe this can also indicate kind of a person. Okay. Still, as I said, a word of caution. A candlestick alone is not reliable and nothing should be taken up in isolation. because remember, it reflects only one day's. Now let's move to the short days. I hope you can see the difference between the long days and the short days. Just look at the real body. So in short days, the real body is comparatively small, and it can either be white or green, and it can be black or red. And you know by now what does a white or a green signify and what does black or red signify. It's all to do with the market sentiments, bullish or bearish. So coming to the short white candlestick days. Just refer to this side of your screen, on the right hand side of the screen. Now if you see a short white candlestick days, or instead of white, as I said, it can also be green, right? It depends upon the kind of software which is what you are using. Okay, because nowadays you find that softwares, they are reflecting various colors, and usually it is white or green for showing the positive sentiments, or it can be black or red if it is a bearish sentiment, right? So what essentially you can see over here is that the real body is very small, right? And these lengths of these shadows, they are not important. It is only the size of this real body which is important in this case, right? And this kind of a chart type, it reflects a relatively weak buying pressure with a limited price. So just look, since it is green, so obviously you will know by now that the closing price will be over here, somewhere over here. Just look at this arrow. The closing price will be somewhere over here, and the opening price will be somewhere over. So you see the variation or the difference between the closing and the opening is very, very small, right? Right? And this thereby indicates a relatively weak buying pressure. Okay? So, how to identify? I've already said it's small, the real body is small. And of course, this lens of this wicks or shadows, whatever you say, they are not that important. They do not reflect any kind of information. So, uh, it may show the continuation of a trend as well as a reverse market. Okay, so this kind of a short candlestick, if you ever happen to witness any kind of a chart type, how will you sort of use it for your decision making, or how it should be interpreted is that it might show the continuation of a trend, maybe a bullish trend. In this case, of course, as we can see, it's all green, so the continuation of a bullish trend as well as a reversal likely to set in. So essentially, it might show that now that bullish sentiment is slightly fading away, and maybe from the very next day or very next moment, the bearish trend might set, the bearish sentiments. Okay. So again, to come to any kind of a conclusion, you have to see the neighboring candlesticks, which must be undertaken, which must be considered for a healthy decision regarding the market. Okay, so this was a short white candlestick or a short green candlestick. Now, let's come to the short black candlestick. Short black candlestick or short red candlestick. Right? So here, as you see, the body is again small, okay, and it is red in. So what does it reflect? I'm sure you must be getting a hang of it now. So relatively, it implies that there is a selling pressure, and relatively it implies a weak selling pressure with a limited price. So where is going to be the position of the opening price and closing price in this case? So in this case, the opening price is going to be somewhere over here. Opening price is over here, and the closing price will be over here. Which means what? opening price is greater than the closing price. Opening price is here and the closing price is over, right? So the opening, since the opening is higher or greater than the closing price, it indicates that there is a selling pressure existing in the market and there is a limited price. How will you recognize? The body is small. Which body? The real body of this candle is small, is relatively small. Okay? And of course, these shadows which you are seeing or wicks which you are seeing over here, okay, they don't signify anything. Okay, as far as this short black candlestick or short red candlestick is concerned. So it may show the continuation of a trend as well as a reverse. So let's say if the market is very bearish, you are just seeing this kind of a chart type, okay, all right, this kind of chart type, then maybe that going ahead a reversal is going to set in. This means what? Bullish trend might set in. Remember, I'm using this word might because it all depends upon the kind of news which is coming in. So it may show the continuation of the existing trend, or it might also indicate a reversal, right? And yes, you must know by now that nothing goes in isolation. Everything has to be taken, the broader picture has to be taken before you take a final. Let's now come to another chart type, another candlestick chart type. That is MARUBOZU. MARUBOZU. What is MARUBOZU? So here again, there are various types of MARUBOZU. It can be a white MARUBOZU, it can be a black MARUBOZU. There are various types of MARUBOZU, right? So what is a white MARUBOZU? So it's a long white body with no shadows on either end. Are you seeing any shadow at either end? Either on this side or on this side? So the moment you see only a real body, okay, which is white in color, it is then referred to as a white MARUBOZU. And there are no shadows on either. So what does a white MARUBOZU has to say? This is what it is, as you can see on the right side of your screen. And it represents an extremely bullishness characterized by a long white body. Remember, a green body as well, okay, having no shadows on either end. The body of the candlestick is, how will you recognize this? So first is there won't be any shadows at either end. Next is the body of the candlestick is long and is white. So it can be long and green also, okay, and there are no upper or lower shadows, okay. So what does it indicate about the market sentiments? So a white MARUBOZU simply means that the opening price is equal to the low of the day. So where do you think your opening price will be positioned? Just look at this arrow. The opening price will be positioned at the bottom. This one. And this also happens to be the lowest price of the day, the lowest trading price of the day, right? So this is both the opening price for the day and the lowest price of the day, right? And the closing price, you can see over here the arrow, yes. So the closing price is equal to the high of the day, and that is why you don't get to see any wicks on either side. Okay? So this shows that the buyers control the price action from the first trade to the last trade. And the day opens and prices continue to go up all the day without looking back, thus forming a long white day with no lower shadow. Right? And the day also closes at a high of the day with no upper shadow. So neither there is a lower shadow nor a higher shadow, and as I said, this generally indicates a bullish sentiment. So understand that before you take any call, you just have to see the position with the broader technical picture. Okay, that is equally important. So it may also show a potential turning point and suggest that prices have reached support level after an extended decline. Now, if it is seen after a long and significant rally, it may point to excessive bullishness and that prices are at dangerously high levels. So you have to be very, very cautious. If the prices are dangerously high, then it might indicate that going ahead there will be some decline due to some kind of profit. Now, yes, don't bank upon a single day's chart type to take your decision. So this was your white MARUBOZU. Now let's come to the white opening MARUBOZU. Now, why I say opening MARUBOZU? You see something over. So you see a shadow on the closing side. So this is the closing side. White anyways indicates that the closing price will be positioned somewhere over here and the opening price will be positioned somewhere over. Okay, so the wick is, or you can say the shadow is on the closing side, but no shadow is seen on the opening side. So this is referred to as white opening MARUBOZU because you can only see the shadow on the closing side, right? So this kind of a candle type, if you ever happen to see this kind of candle type, okay, in the chart, what it signifies, what it has to reflect. So it represents extreme bullishness and it is characterized with a long white body that has an upper shadow, but no lower shadow. Okay. Now, the body of the candlestick is white and it is long and it is having no lower shadow. So this is a good way to sort of recognize this. And yes, what kind of market behavior is projected? So a white opening MARUBOZU indicates that buyers control the price action from the first trade to the last trade. Extremely bullish sentiment in the market. Okay, and we are all hankering to see this kind of a market behavior, especially now. Let's see when we get that wonderful opportunity, right? So the day opens and the prices continue to go up all day long without looking back, thus forming a long white body or a long white day with no lower shadow. Okay. So, however, you can also see that the day does not close at the high of the day and thus creates an upper shadow. So essentially, the candlestick is very, very bullish. Okay, but you have to be very careful, right, before you take any kind of decisions. All right. But if this trend is there, if it is continuing for long, then maybe there might be a small reversal which may be witnessed going ahead. Not majorly, but yes, you will find that this white body is becoming a little bit small. So that you have to be very, very cautious about. Alright? Next we come to white closing MARUBOZU. And why is it referred to as white closing? Because here you are seeing the wick or the shadow on the opening side, okay, of the market. Okay, so the candlestick again represent extreme bullishness and is characterized with a long white body and is having a lower shadow but no upper shadow. It's the lower shadow which is what you witness, and it has a shadow on the opening side but no shadow on the closing side. Right? So this kind of a pattern or this kind of a chart type, if you ever happen to see white closing MARUBOZU, then it indicates that the buyers control the price action from the first trade to the last trade. And the day opens and the prices they go slightly lower, forming a lower, right? This is followed by a rally that drives prices over the opening price, and the rally continues all day, ending with a closing price equal to the high of the. So the closing price is equal to the high of the. So essentially, this means that the bulls are very strong during the day, except during the initial phase of the. The bulls are very strong during the day. However, they're in the opening session, the things were not that sorry, bullish. Okay, so except during the initial phase of the session, the bulls were very strong during the entire day, right. So this was your white closing MARUBOZU. Now let's come to the black ones. So the black MARUBOZU is a long black body with no shadow on either. Okay. So what does it mean? So a black MARUBOZU reflects extreme bearishness and is characterized by a long black body or a long red body, either of the two. And as you can see, there are no shadows on either side. There are no shadows on the either side of this particular candle. So how will you recognize? It's black and long, and there are no upper shadows or the lower shadows. So black MARUBOZU forms when the opening price. So here, since it is black, your opening price is going to be over here. Since it is black, it is indicating a bearish sentiment. So the opening price will be lying over here and the closing price will be over here. Which means what? The market is not having a very optimistic kind of view, okay, for that particular time period. So this is the opening position or opening price, and this is the closing price. This also reflects the opening price, also reflects the highest of the day, and this closing price reflects the lowest of the day, and that is why you don't happen to see any shadows on either side, right? So a black MARUBOZU forms when the opening price is equal to the high of the day. Where is the opening price? This is the opening price, which is equal to high of the day, and the closing price, just look at the arrow, the closing price is equal to the low of the day. Now this shows that the sellers control the price action from the first trade to the last trade. And the day opens and price continues to move down and down and down, and all day without stopping, thus forming a long black day with no upper shadow, right? So the day also closes at the low of the day with no lower shadow. So technically, what does it mean? It means that the sellers are overtly aggressive, okay, and the market sentiments is very bearish, okay, and it is seen after a long decline. If it is seen after a long decline, it may signal a panic or a capitulation and a final sell-off attempt by the sellers before the bulls regain the. Alright, so this was your black MARUBOZU. So you have to see essentially where this is positioned, because if it is positioned after for a very long bearish trend is coming in, is existing in the market, and then you happen to see this black MARUBOZU, then maybe it might refer to some kind of a reversal, which means what? That maybe going ahead, the bulls might regain the control, and that for that particular day, the black MARUBOZU may be a final attempt by the sellers. Now we come to the black opening MARUBOZU. Now what is so opening MARUBOZU? If you see, when you see the shadow, you are seeing the shadow at the bottom. Okay, so if you see, it has a shadow on the closing side. This is the closing side. So in a black opening MARUBOZU, you are seeing a shadow on the opening side. Right? Okay. So how do you actually sort of identify this? So this candlestick represents extreme, it's black, it's a long body, and you get to see a shadow on the closing side, but no shadow on the opening side. So that is the way you are going to recognize this, and this essentially indicates an extreme bearishness in the right? So, yeah, so what is the kind of trading behavior? The sellers are controlling the price action from the first trade to the last trade, and the day opens and prices continue to go down all day long without looking back, thus forming a long black day with no upper, right? So the shadow is seen on the closing side. The shadow is seen on the closing side. Okay. So yes. So if this can also sort of indicate uh, a bullish trend setting in if it is seen after a long decline, and it may signal a panic or a capitulation. So black opening MARUBOZU we have seen. Okay, now let's come to the black closing MARUBOZU. So again indicating a very bearish sentiment. But look at this wick or look at the shadow. So it has a shadow on the opening side but no shadow on the closing side. Right? Now, a black closing MARUBOZU, it indicates again that the sellers they control the price action from the first trade to the last trade. And the day opens and prices go slightly higher, forming an upper trend. So this is the most important thing. This is the kind of a behavior which is reflected in case of a black closing MARUBOZU, right? So the day opens and the prices go slightly higher, forming an upper trend. So this was the high for the day. This is the high for the day. So the market has slightly moved on the higher side. The market, as you can see, it has slightly moved on the higher side, right? So then price reverse direction moving below the opening level, and the decline continues all day, ending with a closing price equal to the low of the day. Which means what? Even at this point of a time, during the close of the day, the market sentiment is still bearish. The market sentiment is still bearish. Right? Now, so this, if it is seen after a long decline, it may signal a panic kind of a situation or a capitulation, and maybe this is a final sell-off attempt before the bull regains. So this was about black closing MARUBOZU. Right. So I think we can close for this particular session. And if there is any doubts, any questions which you want to ask, I can take those doubts, I can take those questions. Yes. Anything you want to ask?
So, ma'am,
Right. So what we do is we close today's session at this MARUBOZU, and next when we meet in our third session on technical analysis, we are further going to sort of understand more candlestick types and how it can be used for interpretation purpose. We'll also be seeing the broader picture, and from there on, how will you sort of pick all these sort of chart types to make your own decisions, right? So with this, thank you so much, And I hope that you have benefited from this session, technical analysis. Thank you.